Hello and thanks for stopping by. My name is Jason Bond and I'm a swing trade expert. I spent the first 10 years of my professional career as an elementary education teacher because I love working with kids. However, teaching in public schools didn't satisfy my hunger for competition, so I left that behind to compete on Wall Street. This video is a real example of 3 alerts on one stock I sent to my premium subscribers by text message and email in real time. Now, Local.com is a $56 million company, and it's a pretty good $56 million company. It's a small cap. They compete in a space with companies like Groupon and Living Social. Of course, Facebook and Google and whatnot are entering that space as well. Basically, what LOCM does is help brick and mortar businesses connect with online customers. All right, they use digital marketing products to connect brick and mortar businesses with digital customers. All right, and this is a very hot space right now. Hot spaces, of course, offer good catalysts. What we're looking at here is a 1-year daily chart. So each of these candlesticks represents a day, and this is a 1-year period in time. Now, being that this is a hot space, there are going to be frequent things that can cause the stock to go higher. I call them catalysts. All right, good news, short interest on the stock, a buyout, things of that nature, hype, whatever, an analyst upgrade, it doesn't matter. But a stock in a hot space is going to have more catalysts than a stock in a cold sector. So the first alert on LOCM was based on short interest. All right, there was a heavy short interest on the stock, and I left teaching in January 2011 to start this newsletter, and shortly into the newsletter, right around here, I alerted LOCM based on a short interest. The second alert was when they announced a big deal with Google, and you can see when that volume came in right in through here, okay? And then we were actually in 5 days before this deal was announced, and we cashed in a nice profit here. And then most recently, just last week, okay, in October, I alerted LOCM again to my subscribers because of the short interest on the stock. Now, if you're unfamiliar with what short interest is, I'll just give you a brief explanation. Those of you who are experienced traders, bear with me. Short interest is, or shorting is basically the opposite of buying a stock. You're taking a bet against the stock. You're basically calling BS and gambling that the stock is going to go down. Now, the risk to shorting a stock is that there's no limit to how high a stock can go. You know exactly what you're going to lose if a stock goes from, let's say, $5 to 0, but a stock can continue to climb, and when you short it, your losses can compound significantly if this trade goes against you. But in LOCM's case, you can see that the stock has been in a very clear downtrend, all right, since the new year. It was up in the $6 to $7 range, and obviously it's just done nothing but make lower highs, okay? You have a high, a lower high, another lower high, another lower high, etc. But again, it's in a hot space. It's a good $56 million company in my opinion, so there are going to be good trading opportunities on the stock. In all 3 cases, we made over several $1,000s. I made over $7,000. My subscribers may have made more or less depending on how they decided to trade it, but my alerts were all sent by text and email. Let me briefly discuss the price action and the reason for doing what I did and what we benefited from. The first alert was sent here, and I picked up 5,000 shares in the $3.60 range, okay, and that was on 3/29. Now, mind you, all of my trades are verified by a third party and linked directly to my brokerage account, so you can verify if you'd like. So I alerted here 5,000 shares at 360, picked up another 5,000 shares 3 days later when the trade was going well for us. You can see it was moving up. And the reason for picking up shares is the short interest on the stock was over 10 days to cover. So there were a lot of shorts that were gambling the stock would continue to go down. And going back to my story about short interest and shorting stocks, when a lot of shorts are in a play, they have to buy their shares back and return them to the person they borrowed them from, in most cases a broker, obviously. So anytime there's a lot of buying, there's a supply and demand issue. The demand is high, the price goes up. If there is no demand and people are selling, the price goes down. So shorts enter the stock and they're winning as the price is coming down. But as it starts to creep back up, their profits are getting smaller. And sooner or later, when a whole bunch of shorts decide to cover their shares or buy their shares back, you get what is called a squeeze. And in this case, it squeezed for us. We were in with 10,000 shares here, and it squeezed a full dollar from 383 to 484. Mind you, it was alerted back here in the 360 range. Okay, so 360 to 480 over $1.20 a share on a $4 to $5 stock in 4 days. And this candlestick here is pretty big. This represents the price action for this day. This all took place in the last 15 minutes of trading. I was watching the stock. I picked up shares at the low of the day. I was averaging up because I really thought it was going to squeeze. And as you can see, about 3 million shares fired in the last 15 minutes of the session, causing the stock to climb super fast. I alerted my subscribers that I sold 10,000 shares at what was it, 435 right in through here. It continued to climb as my subscribers received their text message and email all the way to 484 for a significant profit. I made over $6,000 on this trade. Now I put LLCM aside and moved on to other stocks for a period of time, but as it was, slowly making support in through here, I alerted it again to my subscriber base. All right, and this time I alerted it because it was at good support and had an opportunity to move up off of that support. What is support? Well, it's price action lows. You've got your low here, you've got your low here, and your low here. So the stock is trading sideways right in through here. It could drop off and fall lower like it did right here, or it could move up like it did. So we positioned in with 7,500 shares, and I want to get the date right on this, at $3.36 on 6/29. So 7,500 shares here was the alert, and again at 336 on this date of 6/29. Just several days later, the stock was still moving sideways. Not a loss, not a win. So I decided to take some of my position off of the table to avoid something like this. I put an alert out that I took 5,000 shares off the table for a small profit right here, and I still had 2,500 shares in play. Now you can see the big move up here on the volume. This actually occurred, okay, as a result of excellent news. They signed a deal with Google, and the stock flew up the chart. Unfortunately, I was down to 2,500 shares, so I only took $1,181 on the trade profit, but you can see how this swing trade played out for us. So again, the idea was good risk reward, get ourselves positioned at support, and try and time a catalyst. That's what swing trading is. Swing trading isn't buying momentum, it's timing future catalysts, and that's what I do on a regular basis. So we took a lot of profit on this one because it moved up in the after hours. I actually sold right here, and then in the after hours is when the stock gapped up. And you can see the next day's open was up here. So this is the day that the news came out. You can check Yahoo Finance if you'd like. 7/7, July 7th, the news came out. It traded up in the after hours. I alerted my subscribers to take that I was taking the rest of the profit, and they could do what they'd like. And you can see that it continued to move up for 2 days, and then it pulled back significantly. But anyways, we traded it for $1,183 if you follow my buy and sell signal exactly. And then we did it again in through here, and I want to get my date correct. But again, this one was a short squeeze alert. Just like this one, you can see the big drop, so the short interest builds. We have another big drop, so the short interest builds. But then you see that creeping action. This creeping action right here looks very similar to this creeping action right here. And usually when you have creeping action like that, again, the stock starts to build pressure and eventually squeezes. And what happened here, and let me get my date right, 10/10 at 225. So where is that? 10/10. All right, so I alerted 5,000 shares bought and 10/10 at 225, which was a Monday. And you can see how the stock gradually climbed. And then on the same in the same week, on Friday, there was a positive article written about the company on a major media outlet that caused a lot of buying to come into the stock. And that type of hype or that type of media coverage is a catalyst on a company like that we look for. And my trading range was right in around $3. I alerted selling all 5,000 shares at 270 and took another $2,252 in 4 days on this trade. So again, this was based on a short interest because it was over 10 days to cover, and we were at good support. So in all three situations, I put my subscriber base in just above support so that if the stock pulls back, we have a very clearly defined stop loss area. In this case, we were in here, stop loss would have been the recent low. In this case, we were in here, and the stop loss was very tight, so we were only playing with a 10 to 20 cent range right here, but we ended up taking a lot of money, or much more than 10 to 20 cents to the upside. And then again here, alerted at 225 with a stop loss in and around the $2 range. Mind you, this was in through the market collapse and the stock held $2. So I told my subscribers, when a stock holds a certain range in a really bad market, that tells you that most of the big sellers are out. And that's a pretty good opportunity for you to take a position. The risk to the reward is in your favor. And of course, we benefited about 50 cents a share based on my alert right here, and that equated to about $2,300 in profits for me. So anyways, this isn't rocket science, but it has taken me 10 years to perfect this swing trade system. I traded as a hobby while I was teaching, and now this is what I do full time. This is an active approach to trading. It's not long-term trading, but it's not day trading either. So you're not going to see me alert a stock by text and email and then 5 minutes later tell you that I've sold or bought it, unless something major happens to the company. But it is an active approach to trading. So my goal is usually 30 to 50 cents a share. I usually pick up 5,000 to 10,000 shares of $2 to $3 to $5 stocks. I'm usually trading under $10 a share. And I like to make about $1,000 to $3,000 profit per trade. Now, because this is an active approach to trading, the system works perfect for people who have jobs and trade as a hobby. I did it for 10 years, so I know what it's like. I send all of my swing trade alerts by text message and email because almost every broker has a digital app for smartphones. So most of my subscribers actually have jobs that they work during the day. So if you do, I think this will work perfect for you as well. Now, if this is something that you'd like to try, I'd encourage you to sign up. I have a money-back guarantee. I charge $995 a year. And basically, I'm on call for my subscribers 24/7, and I'm sure any of them on my list will tell you that. The website is updated daily, and I offer one-to-one Skype sessions as a part of your subscription. Keep in mind, $995 a year is less than $2.80 a day, and that's pretty much the price of coffee unless you're going to McDonald's and getting the 99-cent menu, which I happen to like. Anyways, had you followed me on those three alerts, you'd have made about $10,000. 6,221 on the first, 1,181 on the second. Keep in mind we had 7,500 shares in through here, so this would have been almost a $7,000 score. I missed it by 2 hours. I still made $1,200 on the trade. And on the third, 2,252 in through here just recently. This is how my system works. And that's $10,000 in profits on 3 trades, all with good plans for exit in case the stock turns down against us, which in the market is going to happen. You have winners and losers. Right now I'm winning about 70% of the time, and again, all of my trades are verified through a third party and linked directly to my brokerage account, so I can back up everything that I say here. I encourage you to give Jason Bond Picks a try. I hope this opportunity will work out for you. I know you'll be glad that you did. Again, to prove that I'm not a hype artist, all my trades are linked to my brokerage account, so I can back all of this up. Just email me at jason@jasonbondpicks.com and we can talk about it. Have a great evening, everybody. I hope to talk to you soon.